Welcome to Headlines on Live, where tonight we are examining an urgent matter that has sparked considerable anxiety among older Americans, permanent residents, naturalized citizens, and immigrant families throughout the nation. Reports circulating across various platforms suggest that the Internal Revenue Service has introduced sweeping new regulations taking effect in 2026 that specifically impose heightened foreign account reporting obligations on seniors and immigrants. The speculation has generated widespread concern, confusion, and in some instances, genuine fear regarding potential consequences for taxation, government benefits, and even immigration standing. This evening, we are committed to separating verified information from unfounded claims, providing you with the clarity necessary to make informed decisions about your financial obligations. Let us begin with the most critical piece of information you must understand. As of this broadcast, no officially published final regulation from the Internal Revenue Service establishes an entirely new reporting framework exclusively targeting individuals over the age of 60 or immigrants for the 2026 tax year. While policy discussions regarding enhanced compliance measures have occurred within government circles, particularly concerning foreign asset disclosure, no confirmed finalized rule creates lower reporting thresholds based solely on age or immigration category beginning in 2026. However, dismissing this topic entirely would be unwise. The significance of this conversation lies in the reality that numerous seniors and immigrants are already subject to existing foreign income reporting statutes that carry substantial penalties when misunderstood or overlooked. Rather than responding to speculation with fear, we shall focus on established facts and current legal requirements. Under existing federal tax law, United States citizens and lawful permanent residents, commonly known as green card holders, bear tax obligations on their worldwide income. This encompasses wages, pension distributions, rental proceeds, investment returns, and indeed income derived from foreign bank accounts or overseas retirement arrangements. This principle has remained in effect for many years and represents no departure from established practice. The rule applies with equal force whether an individual was born within American borders or acquired citizenship through the naturalization process. Once an individual achieves status as a United States tax resident, worldwide income reporting becomes mandatory. Foreign financial accounts warrant particular attention. The Foreign Bank Account Report, widely referenced by its abbreviation, represents a critical compliance document. This report is not submitted alongside your standard tax return. Instead, taxpayers must file it electronically through the Financial Crimes Enforcement Network portal. The governing principle operates with straightforward clarity. When the aggregate value of your foreign financial accounts exceeds $10,000 at any point during the calendar year, filing becomes obligatory. The operative phrase here demands careful attention. Total combined value determines your obligation. Whether a single account contains the entire sum or multiple accounts collectively reach the threshold makes no difference under the law. An individual maintaining one account holding $5,000 and another containing $6,000 has exceeded the reporting threshold, thereby triggering the filing requirement. For older Americans who maintain modest accounts in their country of origin, perhaps for convenience during family visits, this requirement frequently arrives as an unexpected revelation. For immigrants who retained savings accounts abroad prior to establishing residence in the United States, identical obligations apply. Failure to submit the required report can result in substantial financial penalties. For non-willful violations, those arising from genuine oversight rather than intentional concealment, penalties may reach $10,000 per violation. For willful violations, where taxpayers knowingly disregarded their obligations, penalties escalate dramatically, potentially reaching the greater of $100,000 or 50% of the account balance. These consequences underscore why comprehensive understanding of reporting requirements matters profoundly. Beyond the foreign bank account report, taxpayers must consider Form 8938, which implements portions of the Foreign Account Tax Compliance Act. Unlike the separate bank account report, this form accompanies your regular federal income tax return. For individuals residing within the United States who file as single taxpayers, the filing threshold generally stands at $50,000 in specified foreign financial assets at year end, or $75,000 at any point during the year. Married couples filing joint returns face higher thresholds. These requirements derive from current law and apply broadly based on tax status, not specifically to seniors or immigrants as distinct categories. Understanding the origins of speculation regarding 2026 requires examining recent developments in tax administration. Over recent years, the Internal Revenue Service has substantially enhanced its data sharing capabilities and refined digital matching systems. These technological improvements mean that discrepancies between information taxpayers report on income tax returns and information reported by foreign financial institutions through international agreements face greater likelihood of detection. Additionally, public discourse has addressed improving compliance among populations maintaining complex international financial connections, including retirees residing abroad for portions of the year and immigrants preserving financial relationships in their home countries. Nevertheless, discussion of enforcement enhancements differs fundamentally from finalized rule changes creating new taxpayer categories. Presently, reporting obligations derive from tax residency status and asset thresholds, not from age classification alone, nor from immigration category alone. Older Americans should direct particular attention toward foreign pension arrangements and foreign Social Security type benefits. Numerous retirees who pursued careers abroad for portions of their working lives receive pension distributions from foreign governments or employers. These payments may constitute taxable income within the United States depending upon the provisions of tax treaties between the United States and the originating country. Certain treaties provide partial exemptions from taxation. Others permit foreign tax credits, preventing double taxation of the same income. However, in most circumstances, the income requires reporting on your United States tax return even when subsequent credits offset the tax liability. For permanent residents and citizenship applicants, tax compliance carries heightened significance extending beyond mere financial obligations. During naturalization proceedings, applicants face questions regarding their tax filing history. United States Citizenship and Immigration Services may examine whether taxes were filed properly and whether outstanding tax debts exist. Failure to file required returns or willful concealment of income may raise concerns regarding moral character. This does not suggest that innocent mistakes automatically undermine naturalization applications. However, patterns of non-compliance can generate delays and invite additional scrutiny from immigration authorities. Clarification regarding institutional boundaries may alleviate unnecessary alarm. The Internal Revenue Service does not independently create immigration status consequences. The tax agency administers tax law, while immigration agencies administer immigration law. Although information sharing occurs under specific circumstances, no public confirmation exists of a new system for 2026 that automatically identifies seniors or immigrants merely because they responded to questions regarding foreign accounts on their tax returns. Practical guidance for seniors and immigrants maintaining foreign assets follows naturally from understanding these requirements. Initially, gather accurate documentation of all foreign financial accounts. This includes checking accounts, savings accounts, investment accounts, foreign retirement arrangements, and certain life insurance policies maintaining cash value. Determine the highest balance held during the year. Avoid estimation when official statements remain available. Subsequently, assess whether combined foreign account balances exceeded $10,000 at any time during the calendar year. If this threshold was crossed, a foreign bank account report filing requirement likely exists. The deadline coincides with April tax filing deadlines. though an automatic extension to October applies. Submission occurs electronically and remains separate from income tax return filing. Additionally, determine whether specified foreign financial assets exceed the Form 8938 threshold applicable to your filing status. When uncertainty persists, consultation with a qualified tax professional experienced in international tax matters becomes advisable. International reporting represents one of the most intricate areas of tax law, and even experienced domestic tax preparers occasionally overlook these specialized requirements. Should you discover prior year failures to file required foreign account reports or the relevant tax form, maintaining composure serves your interests. The Internal Revenue Service has established programs designed to assist taxpayers who were non-compliant but whose failures were non-willful. Streamlined filing compliance procedures may permit resolution with reduced penalties when the failure stemmed from oversight rather than intentional evasion. Proactive engagement with these programs yields better outcomes than waiting for enforcement notices. Maintaining organized records protects your interests over time. Retain copies of filed tax returns, filing confirmations for foreign account reports, and supporting documentation. This practice holds particular importance for permanent residents contemplating future citizenship applications. Demonstrating consistent compliance can facilitate smoother naturalization proceedings. Addressing seniors specifically, many retirees operating on fixed income or Social Security benefits believe the government maintains little interest in their financial reporting. This assumption proves incorrect. Compliance rules apply regardless of income level. Even modest foreign accounts can trigger reporting requirements when thresholds are crossed. Government focus centers on accurate reporting rather than punishing older Americans. However, unreported accounts can generate complications, particularly when discovered through data matching technologies implemented in recent years. Confusion frequently surrounds United States Social Security benefits. No confirmed change for 2026 alters the taxation of domestic Social Security payments. Up to 85% of Social Security benefits may face taxation depending on total income. This principle has remained in effect for many years and continues unchanged. Discussion surrounding foreign reporting bears no relationship to the taxation formula governing domestic Social Security benefits. For immigrants holding work visas who satisfy the substantial presence test and qualify as United States tax residents, worldwide income reporting applies with full force. Visa category does not exempt individuals from tax residency obligations when residency tests are satisfied. Uncertainty regarding tax residency status warrants professional consultation. Incorrect classification can produce filing errors with potentially serious consequences. The phenomenon of fear-driven messaging warrants examination. In contemporary digital environments, alarming headlines proliferate rapidly. Phrases such as massive crackdown, automatic audit trigger, or seniors targeted generate audience engagement but may not accurately reflect legal reality. Responsible financial planning requires verification of claims through official government sources, including the Internal Revenue Service website, the Federal Register, and reputable tax law analyses produced by recognized professionals. Our commitment at Headlines on Live extends beyond generating audience attention. Our purpose centers on translating complex government policy into clear, comprehensible guidance serving your genuine interests. When new rules achieve formal proposal status, they proceed through established publication processes. Proposed regulations appear for public comment. Final regulations receive official designations and detailed implementation instructions. Significant changes typically attract coverage from professional tax organizations and established financial media outlets. When encountering reports of new rules, certain questions merit consideration. Has the rule appeared in the Federal Register? Does it carry a specific notice or regulation number? Does the Internal Revenue Service official website reference it directly? Are reputable tax law firms providing analysis? When answers to these questions remain unclear, treating the information with appropriate caution serves your interests. Nevertheless, The trajectory of tax enforcement over the past decade has unmistakably emphasized international transparency. Foreign Account Tax Compliance Act agreements with financial institutions worldwide require reporting of United States account holders. Technology has enhanced cross-border data sharing substantially. While no seniors-specific rule has received confirmation for 2026, the broader environment clearly favors increased compliance monitoring across all taxpayer categories. The essential conclusion emerges clearly. Whether you are a senior, permanent resident, naturalized citizen, or immigrant filing United States taxes, full transparency represents your safest approach. Report worldwide income accurately. File required foreign account documentation. Maintain detailed records. Seek professional guidance when international assets create complexity. Avoid relying exclusively on social media content or unofficial summaries of unclear provenance. Financial security during retirement depends not merely on benefit amounts, but equally on regulatory compliance. Avoiding penalties preserves hard-earned savings. Accurate reporting protects the integrity of immigration journeys. Organization reduces anxiety and positions you favorably should questions arise. Should official changes receive announcement for 2026 or subsequent years, we pledge to provide clear analysis without exaggeration and without fear-inducing tactics. Until such developments occur, focusing on existing law and maintaining compliance under current requirements represents the prudent course. You have invested tremendous effort building your life in this country. Confusion regarding tax reporting should not create unnecessary risk threatening that investment. Remain informed. Verify information through reliable sources. Pose questions to qualified professionals. Base decisions on documented facts rather than alarming speculation circulating without official foundation. This has been Headlines on Live. Remain vigilant, stay informed, and trust that we shall continue delivering clear analysis of every significant development affecting seniors and immigrant families throughout the United States.